From the Income Protection Journal, you're listening to the Income Protection Journal podcast with Jamie Fleischner.
So here is something almost nobody notices about insurance. Nearly all of it was forced on you. The state makes you carry auto insurance. The bank makes you carry homeowners. The landlord makes you carry renters. The one kind of coverage nobody requires is the protection on the paycheck that keeps every other policy paid for in the first place. My two guests today live on the property and casualty side of that picture, and they see the gap from a vantage point most people never get. John DePinto is the executive vice president of Alkeme Insurance, and he's 30 years in the insurance industry. The first 6 handling claims when people got hurt in car accidents and lost income, the next 23 running his own agency across Colorado. Sam Cleland is my nephew, the 3rd generation in our family's Colorado insurance line dynasty, 2 months into selling insurance at Alkeme in Denver. And so what 30 years of pattern recognition and 2 months of completely fresh eyes can see together about where the required coverage ends and the unprotected income begins is what we're going to get into today. So welcome, guys.
Thanks for having us, Jamie.
Sure. So, John, let's start with you. So after 23 years of running your own agency, what does a typical first call with a new client about insurance look like?
Sure. Well, I would say the first call for us is making sure that there's a good fit for the client to us and us to the client. What we're looking for is clients that are concerned that if they have a really bad day, that they don't have to worry about money coming out of their pocket because they're properly covered on their insurance. Price is always a consideration, and we understand that. But we are really working with clients that have balance the price and coverage components. And from a client standpoint, I think it's equally as important for them to interview us to make sure that we're a good fit for them. I think clients that we're working with value that we pick up our phones, simple things, that we respond, that we are professional, that we educate ourselves continually so we're up to date with current trends. And so once we get past that, we see we're a good fit for them and they're a good fit for us. We typically have a fact finder where we're looking for what their hot button issues are, what makes them stay awake at night in terms of their insurance. Sometimes they don't even know what they should be concerned about because there's so many evolving trends in insurance, like VRBO, or do you rent out your home sometimes, or do you have a nanny that works for you, or things like that. They might not even understand they have an exposure. So we're kind of asking them questions kind of in a discovery method to understand if they have any exposures that we can help them with.
So I like how you're very high touch, and it sounds like you really try to get to know the client and figure out what's best for them. And I think especially in this kind of environment today where you have all these advertisements, where you can get car insurance 15 minutes or less, and, people just shop online. What is the difference between people just going and doing it themselves and just getting instant quotes per se versus coming to somebody like you?
So what I would say, it's very easy. The companies make it extremely easy to buy your own insurance on your own. But if you're left to your own devices, typically people will look for the least expensive product that they can get, and without understanding the ramifications of that. Like in Colorado, the minimum limits for liability. So if you injure somebody in an accident, an auto accident, the only coverage you have to have in Colorado is $25,000 of liability coverage per person. That's not going to pay for one night
nothing.
in the hospital.
Yeah.
And then if you don't have any coverage after that, I saw an interesting statistic the other day that the United States has 4% of the world population yet a quarter of all the attorneys in the world reside in the United States.
That sounds about right. Yeah. And
Which
a
is
lot of those attorneys are doing personal injury for auto accidents and things like that. There's a lot of that.
absolutely.
Yeah.
And if you don't have enough insurance coverage, they're running asset checks on you to see the equity that you have in your home, the tangible property that you own, future earning potential, all those things that that's what we're talking to people about. And that's what you can't get by just looking at a computer screen.
Exactly. So really kind of getting to know them, finding out what their real needs are and educating them so they have the most suitable product for what they need.
Right.
Yeah. Okay. So Sam, you're 2 months into the insurance industry so far. So what has been your biggest surprise so far?
The biggest surprise that I've come across so far is the lack of awareness or lack of knowledge when it comes to insurance. Kind of bringing an outside perspective, being a first time home buyer here very recently, buying a new car. You need insurance. It's something you have to have, but there's so much more that goes into it. And I think being able to work with an agency like us here at Alkeme and being under the tutelage of John really opens your eyes of it goes more in depth than people think, that it is truly one of the most important things that you can have, despite so many people being under the mindset of, oh, I will never get in a car accident. I'll never hit anyone. I'm a safe driver.
Mm-hmm.
I won't have, a claim on my house. There's not going to be a fire. That so many people are under that mindset of it will never happen to me, which we hope that it never does. But like John had said, in those times when you're not expecting something like that to happen and something does happen and you're having a really bad day, you're going to look back and go, gosh, I wish that I had paid a little bit more for insurance or understood more about my policy and what's truly covered and what's not.
Yeah. Yeah, I find that really interesting because, again, insurance, even though it's the type of product, again, it's price based or anything else, it's when you're having the worst day that you've ever had, that's when typically sometimes people finally get educated about what they do have or they don't have. And at that point, it's too late. Like when the fire is burning your house or you smell smoke, you can't go and change your policy. You can't change it. And I also think it goes to another thing. We talk to our clients a lot about, if they get too sick or injured and they can't work. And we hear people say, well, it's not going to happen to me. I wear a seatbelt. I stay in shape. I'm careful. Yeah, but there's a lot of things out of your control. And you can just walk into a hospital at any time. And those people didn't think it was going to happen to them either. So
exactly,
it's just a matter of time.
Yep.
So John, before you went independent, you spent years as a captive agent. So paint me a picture of what changes for the buyer when they work with somebody who's an independent broker, as opposed to a captive agent.
Sure. So, when we talk about being a captive agent, all that means is that as the agency, you typically have one company you can sell their products. So a farmer's agent can sell farmer's insurance products, or a State Farm agent can sell State Farm products. And they're great companies. But in my mind, the fundamental failing of that is that if you go to a grocery store, if you go to the clothing store, do you want to have one choice for the type of shoes that you buy, or maybe your feet you have high arches and you need to have a certain type of shoe. And if you only have one shoe to choose from, you're kind of limited with it. It may not be a good fit. So as an independent agent, we represent multiple companies, both from a personal and a commercial standpoint. So great companies like Liberty Mutual, Travelers, Hartford, Nationwide, all sorts of companies like that. And so what we can bring to people are, when you have a marketplace of companies, they are fighting for our customers' business. So they are bringing out consistently different bells and whistles that might be interesting to our clients, or they may have different coverages that might be appealing to our clients, different deductibles, different payment plans, all sorts of, and we also have a wide variety of clients where some of our clients have just, bought their first car and have renters insurance. Some of our clients have a mainstream, home, 500, 600,000 of coverage, and they're a great fit for some of our mainstream carriers. But then we have clients who have $3, $4, $5 million homes, and a really good fit for them is a high net wealth carrier like Chubb or AIG or Vault, which have unique coverages designed to protect high net wealth individuals that a lot of the population simply probably doesn't need. But there's a segment that does need that. And that's what we bring to the table in terms of our carriers being an independent agent.
Yeah. Yeah, I think it's great. I mean, I work independently too, and I use sort of the same scenario. If you're looking for a car, I mean, you look at all your friends, you don't all drive the same cars. Well, why is that? You have different needs, different desires, different budgets. And so it's not a one size fits all approach. So I think it's really important for customers to realize you can go to one place where somebody can walk you through and shop around and find out what's the best thing for you versus thinking, oh, I can just do it myself and buy the cheapest thing because look how much money I saved. Yeah, you might save the money, but you might also find out about the policy at the time of claim. So,
right.
So Sam, so a lot of your people that come to you are buying insurance for the first time. Maybe they just bought a house, they just got married, they got a baby on the way. I think you're all three of those things. So walk me through somebody brand new to all of this. What are they, when somebody who's going through all of that, what are the kinds of questions they should be asking?
Yeah, great question. So usually, it starts out they're buying their first house, for example, let's say. They're going through the whole process. It's one of the most exciting times for them. We know a lot of people, in their young, mid, late 20s, if they are in a position to purchase a home, it's an incredible feat that they should be very proud of. Mm-hmm. And they're going through this process, and then they get hit with, okay, now you need to buy homeowners insurance. And then they ask themselves, okay, well, what's that mean? This house is already really expensive. Now we have to pay for this. So a lot of times it's, hey, our budget's already thin by getting this home. Let's try and, save some money on insurance. And I've had a couple insureds that I've been going through, and I hear that time and time again. And the story that I like to tell is actually, a personal story. My wife and I closed on our house in the fall of 2024. Had a great inspector come out. Everything passed with flying colors. It was amazing. We're like, all right, cool. Well, having a family that is all in insurance, they were very thorough and helped us of, hey, you guys need to make sure that you have this type of insurance. And hey, you probably don't need this. It's not applicable to you, but make sure you have this. And so, we trusted them. They've been in the industry. They know what they're talking about. But at the end of the day, we're like, nothing's going to happen. We just bought a house. Within the first 2-3 months, we had 2 or 3 claims that were completely out of our control for things that passed inspection.
Wow.
And it was very comforting being able to go back to our families and you say, hey, bad news, this happened. It's really unfortunate. We're without heat, and it's December here in Colorado, and it just snowed a foot. God. And we're going, But then on the other side of the coin, it was, thank you so much for telling us that we needed this insurance. Because of that, insurance is paying for a brand new furnace that's going to be installed in 2 days, and we don't have to pay anything out of pocket except for a small deductible.
Wow.
So it was a time like that where we couldn't even imagine if we had not had the right coverage and we just bought a house, something like that happened. And now we have to pay another $15,000, $20,000 out of pocket that we didn't have for a furnace. So I always like to tell stories to, first time home buyers, and it resonates easier that way. There's a lot of things in insurance that people aren't literate when it comes to insurance, and that's understandable. And so being able to provide real life examples that happen to me kind of makes that connection of, okay, I don't want that to happen to me. This is someone that I know that I'm going to do business with, and they're telling me directly that that happened to them. That could happen to me too, and I don't want to be in that position.
Yeah, that's a great story. I know. I mean, I just spoke to a friend of mine who was visiting in town, and he bought a house, did the whole inspection, and 2 weeks after they moved in, they had a sewer line break and the entire house flooded. I mean, it was like a $30,000 thing. They had just scoped it all. They had just done it all. And I mean, That's just the timing. But again, fortunately, it was insured. It was a pain. They had to move back out, but it was all covered. It was all covered.
Yeah.
So.
Yeah. When you make sure that you've got the right things in place, it prevents it from a bad situation becoming an even worse situation. No one wants to have to go through that. It's really unfortunate, but it's kind of damage control that one thing doesn't lead to another. You have to pay a bunch of money that you don't have. You go into debt, and then everything just snowballs.
And then it becomes the money pit. Exactly.
So everything is connected in a way that people don't realize. They view insurance as maybe something that, it's just another box they have to check, something that they have to carry. And they don't realize how intertwined it can be with your income, with your job, with your living,
Absolutely.
your house, your car, your daily lives, that you just never make that connection.
Yeah. So, John, when you were handling auto injury, income loss claims at Progressive, so what did you learn about how fast someone's income ends after a major car accident?
Well, so back in the day, I handled PIP claims in Colorado, which part of the PIP coverage was loss of income due to injuries in an auto accident. And what I've found is, especially more so now than even back then, that was, back in the mid 90s that I was doing this. I feel like if you're injured in an accident, oftentimes people don't have the disability coverage per se that they used to have. A lot of small companies don't offer the disability insurance. And the loss of income benefit on a auto insurance policy, you can get it through the bodily injury claim of the at-fault carrier. But those claims sometimes take 2-3 years to resolve, and you're not getting your money until the claim's resolved. And in the meantime, you can't work. So what do you do?
And how much did those pay? Like on so if somebody gets into a major car accident, and you mentioned there's maybe some income loss benefit. Let's say they're in a terrible accident and it actually does pay. What does a typical policy pay?
Well, it depends on the coverage purchased by the at-fault party. So again, in Colorado, you can purchase limits as low as $25,000 per person.
Wow.
Also,
total or that? Yeah, that's not per month. That's just total. Wow.
That's total. And also, and I can't speak about the rest of the country, but in Colorado, the incidences of uninsured motorists is astronomically high. Mm-hmm. We had a client that's daughter was involved in an accident. She had just graduated. This doesn't really relate to income loss, but she was parked at a stop sign, and a drunk driver hit her head on.
Oh,
and luckily they had uninsured motorist bodily injury coverage on their own policy that provided $300,000 of coverage to pay for her facial surgeries, everything like that. Now, and that could also pay for loss of income if that was relevant. But the point being, if you're depending upon somebody else's coverage to make sure you have enough money in case you can't work, that's a fool's errand, in my opinion. You need to make sure you're protecting yourself and not rely on other people, hoping that they have the proper coverage, because in a lot of circumstances, that's simply not going to be the case.
And did you notice when people were in these accidents, like what happened to them in terms of their income, because a lot of them, when they're really injured, you're not able to work. So what did you see happen in those circumstances?
A lot of times the employer will, try and make accommodations. Like if somebody's working a physical job, they'll try and make accommodations so that they maybe work at a desk. But if they can't work at all, oftentimes the employer has to move on, especially if they're a small employer. They've got to fill the position, and then you're out of work. Don't have income coming in. Maybe you're having to rely upon Social Security, disability, things like that. But again, if I can do it on my own, I'd rather provide coverage for myself rather than depend on somebody else.
And we're also noticing more and more people are self-employed. And so they're even more exposed if something happens. They get into a bad accident. It's all them. They have to make sure that their income is protected.
For sure. And the chances of somebody, and you would know this better than anybody, the chances of somebody, it's much greater chance you're going to have to go on disability due to an injury than it is you actually dying in an accident. And people are, they're buying life insurance, which is obviously important, but it's equally as important, to your point, that they're purchasing disability coverage because it's way more expensive if you're injured and now have all these ongoing medical expenses plus your normal expenses that you have.
Yeah, exactly. We're talking to John DePinto and Sam Cleland from Alkeme Insurance. When we come back, the coverage people quietly stack up on: umbrella, cyber, professional liability, and the one thing underneath all of it that nobody makes them protect.
Hi, I'm Gretchen, and I can't recommend Jamie and Set for Life Insurance more highly.
If you're a medical resident, there's something you should check before graduation. Some hospitals offer GSI disability insurance during residency. That means income protection with no medical exam and no medical questions, and discounts of up to 30%. You can learn if your program has it at gsiquotes.com.
They have helped me for 25 years with my insurance needs.
But here's the catch. GSI usually disappears once residency ends. So if you're still in training, check now. Go to gsiquotes.com. Again, that's gsiquotes.com.
I suggest you give them a call. It will be well worth your time.
All right. Welcome back. I'm here with John DePinto, Executive Vice President of Alkeme Insurance, and my nephew, Sam Cleland, a couple of months into the insurance business here in Denver, Colorado. All right. So, John, umbrella policies. As you know, I send a lot of people your way. A lot of people inquire about umbrella policies, and they're there to protect what people have already built. So when a client sets up an umbrella policy, do they ever ask about the flip side? What protects the paycheck building those assets they have in the first place?
When we're talking to them about the umbrella coverage, they're, in my mind, people who have worked really hard to build up their lifestyle, to build up their income and their assets. In my mind, they want certainty. They don't like surprises. And so that's part of the reason that people are looking for an umbrella policy, is because if they have a really bad day, they don't want to have to call Jamie and say, hey, I need to pull money out of my life insurance policy because I don't have enough coverage to pay for this accident. And that's a great time to discuss with them as well. What are you doing in terms of protecting your own income? On the flip side of things, I think we're two sides of the same coin. Well, oftentimes we're working to protect people so that, again, if they're having a really bad day, they don't have to come out of pocket for things. And you're protecting them in terms of their assets, in terms of their future earning potential. And those are things, I believe we live in a financial village and that we're all specialists at what we do. And I so much prefer, instead of, you see some people who try to be everything to everybody.
Oh, God, no.
And we're not like that. We focus on property and casualty insurance. And when somebody asks us about life insurance or disability or long-term care, things like that, that's when we have experts like you to refer to, because we can't be everything to everybody. And I'd much rather be really good at what we do with property and casualty. And then when somebody asks about those things, hey, Jamie's the person to talk to because she knows way more about this than we do.
Can you give just like a brief primer for people who may not even know what an umbrella policy is and how much you generally recommend for somebody to have?
Of course, it's not a one-size-fits-all calculation. I always talk to people about two factors. Number one, the assets they're trying to protect. So equity in your homes, cash in the bank, tangible property, future earnings.
Is it from lawsuits, or what? When would you file a claim for an umbrella?
So if you injure somebody or damage their property due to a negligent act, like you cause an auto accident, or you forget to shovel your sidewalk and somebody slips and falls, or if you're in a business and somehow somebody falls on your property, those are all liability claims that would that would trigger an umbrella policy or the underlying liability coverage.
Okay, so if you're going to be sued for something, typically.
Exactly. And being sued is kind of a misnomer in that most liability claims, the vast majority of liability claims, are settled between the insurance company and the injured party or their attorney before it ever goes to suit. But there are certainly some times where it goes to trial and the judge and jury ultimately decides who's negligent and then how much money is to be paid to that injured person. And the scary thing is that's when it's out of your control. So let's say you're in from a standpoint of decisions, you could be in a very liberal jurisdiction that tends to reward big awards to the plaintiff. You could be in that type of situation. Let's say you're driving through a county that's a liberal jurisdiction and you're like way more exposed than if you're in a county that's more conservative in terms of jury decisions.
Well, that's really interesting. Yeah. So yeah, that's actually really, and I was just thinking, like dog bites. I have a client who got really severely injured from somebody's pit bull that was on the loose. That's the kind of thing that you sue that person for. I would assume.
Absolutely. That's probably one of the most prevalent homeowners claims that we see. And then that's not even to mention like things that vicarious liability, like let's say you loan your car to somebody because their car's out of commission and they cause an accident. You could potentially be vicariously liable for that accident as well. There's so many different ways you can get sued nowadays. And if you have money, people are coming after it.
I know. So, as you know, we work with a lot of high income professionals. And so they're protecting their incomes. But I think a lot of them also come to us asking about umbrella because I think it's kind of one and the same. They think as I'm building this income, I'm more of a target. If, somebody's going to fall in my sidewalk or, something like that, they're going to see I live in a fancy house. I'm more vulnerable. So that's probably why they really especially want to have extra coverage.
Absolutely. And the people also need to look at their, the activities that they do, or what if they participate in risky activities. And that could be skiing, that could be rollerblading, that could be one of the big things is e-bikes now.
Yes.
And if you injure somebody while riding your e-bike, or are you eating McDonald's when you're driving to work, or do you tend to look at your cell phone when you're driving to work? All those things.
Or all the other people on the road,
exactly.
On their cell phones. I see it in Denver all the time. They're, drifting in and out of the lanes. I don't know if they're high or they're on their phones.
Yeah.
But terrible drivers. Yeah. It's very noticeable. So
100%.
So Sam, now kind of going more. So now we talked a little bit about homeowners, but kind of the next stage, well, typically I should say, what about new parents who come to you? And again, this is their first time. What are some conversations that you have or things that people need to think about when they're starting a family?
Yeah, great question. As you are aware, we are expecting our first child in December. So it's definitely
I'm going to be a great aunt.
You are, yeah. No, it's a very exciting time in one's life. It's, the greatest thing that you could ever do. And it kind of starts conversations of, okay, we're starting a life, and it's going to change our life and everything that we do. How do we do everything in our control to make sure that everything that we care about is protected? Whether that's your car, you're going to be driving a newborn baby home from the hospital or to doctor's appointments, or you're going to have a brand new little fragile life in your home. So it comes down to, how do we do everything in our power to make sure that we are as safe as possible and as covered as possible?
Do you feel more vulnerable now that you're going to be a parent? Like, does it make you kind of, because it's sort of like, okay, you bought the house, now I'm adulting, I got to get a homeowner's policy, like you mentioned, but does it feel differently now that you're going to have a child when it comes to do you feel more vulnerable?
Everything changes, we've kind of, my wife and I have gone through kind of every stage where, out of college, we got an apartment. So we were renters, and there's less that you have to think about with insurance going through renters. And then after that, we bought a house. And then it was kind of that next step up of, okay, now homeowners insurance and going through that. And then we got a dog, and that was kind of a small training step, if you will, towards having a baby. And it's like, okay, we need to get pet insurance. And, thankfully we did. We have a little yellow lab who likes to eat things that she shouldn't, and we have to take her to the emergency vet. And so it kind of builds on itself to now when we're bringing a child into this world of, okay, it's not just her and I in an apartment. It's not just her and I in a house. It's not just her and I in a house with a dog. That there's a lot more risk and things that are in play than just yourself.
So protection becomes really the next step.
Everything.
Yes.
Yeah. Exactly.
So John, so you insure now kind of going into the business client realm. So you insure your business clients' practices against professional liability claims. So what's the gap between how carefully your clients protect the practice and how little they protect the income that the practice depends on if they can't work? So meaning they're looking at liability, but do they also take into consideration that income protection piece?
Well, so I guess I would separate the income of the business from the income of the individual. And most business policies offer protection for, let's say you operate a brick and mortar clothing store.
Okay.
And the clothing store burns down to the ground, and it won't be back open for 9 months or a year. Most policies will offer coverage to protect their loss of revenue during that time period. But that's a really important thing that people need to, sometimes they go cheap on, and they don't, again, like Sam said, they don't ever expect something like that to happen to them until.
Is that the business interruption insurance? Is that what you're referring to?
Yes.
And how much does that, so let's say, like you mentioned, there's this brick and mortar clothing store. It burns to the ground. What does it look like in terms of benefits getting paid to them? How long does it take? How much do they get? For how long?
Sure. So it doesn't protect necessarily their revenue, but it more protects their income after expenses. And so most insurance companies, they'll have they have experts at that from a claims standpoint that will come in, they'll inspect the books, they'll look at historically what their revenue was and what their expenses were for the trailing 12 months. Is it seasonal? Is it not seasonal? And then they're pretty good about providing money fairly quickly to the business owner, knowing that they depend upon that for sure.
So do they look at it and say, okay, it's going to take 12 months to rebuild this structure, so we're going to give 12 months worth of adjusted gross income that the business would have provided? Is that how that works?
Typically, they'll more pay it on an ongoing basis because there's the potential that store might open in 9 months, or it could take 12 months or 18 months. Oftentimes, there's a time limitation of 12 months on that type of coverage, though.
And how much does something like that cost? Like, is it a percentage of income? So let's say it produces for the $100,000 per month. This little business produces that much per month, and they want to insure $100,000 per month. What would the premiums look like for something like that?
So it's typically built into the larger policy. Most business policies think of it like a homeowner's policy for a business. So you have liability built in, you've got property coverages built in, you have the business income, loss of business income built into there, and it doesn't really break it out on a la carte basis, how much it costs. Mm-hmm. But also then think about the type of business. If you have a business that's considered more of a high risk in terms of insuring, that might be more expensive than, insuring a CPA's office, which is generally very low risk and you don't expect too much to happen with that. So it's tough to, put a number on that.
Okay. And do clients quibble about well, it's too expensive to add all of these extra things in, I just want bare minimum? Or do they say, I want every single thing? Are they concerned about that income loss piece of it?
Oftentimes they're not thinking about that. They're thinking about the things like, if my commercial auto is in an accident, what my deductible is going to be. Or, the things that more than likely might happen to them, like if my employee is injured on the job, what's, our out-of-pocket exposure or, things like that.
Yeah.
But our job is to explain to them the things that are less likely to happen, but if it does happen, are critically important that they have.
We're talking with John DePinto and Sam Cleland from Alkeme Insurance. When we come back, the generational view on how this business has changed and the one move John and Sam each want every listener to make this week. Welcome back. My guests are John DePinto, Executive Vice President of Alkeme Insurance, and Sam Cleland, fresh to the insurance industry and the third generation in our family's Colorado insurance line. All right. So, John, cyber coverage is a real part of what you write for business clients now. When a breach shuts down a small business for weeks, what happens to that owner's income? And do buyers see it coming?
That is one of the most underutilized and overlooked coverages that I see right now. And literally, if you look at the news every day, you could probably find a story every day about a cyber breach, whether it's coming internally from inside the United States or it's coming from other countries. There's plenty of people with bad intent. They're trying to go after businesses. And the scary thing about being a business owner is, as a homeowner, you can control to an extent, your exposure. You can talk to your kids and your wife and everybody about, here's what we do. But as a business owner, you might have 30, 40 employees. And every one of these employees could potentially get a malicious email that they could click on. And if they click on that, all of a sudden it exposes your entire computer system where they can shut it down. They can, they can fake like they're you and they, approach the bank about changing a deposit to them instead of you. There's so many things that could potentially happen that it could, if they're dependent upon their computers to do their business, it could literally shut them down unless they pay.
And how long would they be? So let's say this happens, and like you said, let's say it's an office has 40 employees and they're shut down. They had a cyber breach. Maybe it's a medical office and they have all kinds of medical records and social security numbers and all of that kind of stuff. First of all, how long would they be out for? And then number two, would that be kind of like the previous thing that you talked about? It's business interruption where it would replace the income of the business?
if you have the cyber liability coverage. Cyber is typically, there's very limited coverage under a standard business owner's policy, or it may be excluded entirely. And the exclusions on a typical business owner's policy are intended to, that there's coverage elsewhere that you can seek that. So there's cyber liability policies that you can get where if you have a policy like that, you can build in loss of income due to shutdown due to a breach. Whereas if you don't do that, you're simply out of luck.
Yeah.
Which is so scary.
Totally. Okay, so Sam, what is the one thing that people get wrong about carrying insurance in the first place? Or maybe what's the most surprising thing? Is it too expensive or not as expensive as they? What is sort of like a misconception that you think a lot of people have?
I would say that the biggest thing is the idea that they are locked in to their insurance. And that's a big aspect and area as being a broker. We see both sides. Sometimes people get an increase in their premium and they say, hey, I want to go cheaper. You know, they're streaming something at night, watching a TV show or a movie, and there's, you know, a Liberty Bibberty ad. You could save $900 or whatever it might be. They go on, they check it themselves. Oh, yeah, I can save money. They don't know what they're looking at. They don't know what underinsured motorist coverage is. They don't know, you know, how a deductible works. They just look at the premium and they go cheaper. And then on the other side, you have some people who, you know, maybe they do know their insurance. They've had a home for a while. You know, they're a little bit older, that they also don't know that they can shop around, that they can go and look and have the opportunity to have the same coverage that they have now, if not better, more in-depth, better coverage, and be able to save money. I've, you know, only been in the industry for 2 months, and I can't even count how many times I've gotten with someone and put some quotes in and been able to tell them, hey, between your umbrella, your home, your auto, we're going to actually increase your limit. So if something bad does happen, you get more coverage, and you're going to save $2,000-$3,000 a year.
Wow.
It's pretty easy conversation if you can get one of those, and it's more common than you think. You know, if you can go back to someone and, hey, you're going to save a couple $1,000 and we're going to be able to help you more, it's a no-brainer.
Absolutely. All right, John, across 30 years of watching people buy insurance, how is what they expect from their coverage change? And where does protecting their income still get left out of the conversation the way it always has?
So I think where the perspective of the consumer is changing is, it used to be that, and I'll use homeowners as an example, that if you have a pipe break in the basement, that you call your insurance company, they come out, they fix it. You might have a $250 deductible, where nowadays insurance is very expensive, as we all know. And the more claims that you have, the more expensive your insurance gets. So we're absolutely seeing a trend of people being more willing to self-insure to an extent by means of a deductible. So the higher your deductible is, the less expensive your insurance premium is. And so they're more willing to take care of the small things that happen to them on their own, rather than reporting those small claims to the insurance company. And in the same way, smart consumers are doing things to mitigate their exposure to large claims. Like you can install on a commercial auto, you can install telematics devices that are offered by the insurance companies that monitor their drivers' driving habits. Are they driving too fast? Are they braking too rapidly? You know, things like that. So that, and then they can coach their employees so that maybe a claim that might have happened doesn't happen because they've provided proper coaching. Or if you've ever had a water claim in your house, you know that's the last water claim you want to have. Now you can install a water monitoring device that can shut off the water at the main if it senses a change in water pressure. There you've eliminated an exposure that you potentially might have. So more risk mitigation by doing things on their own to avoid losses, and then being willing to accept smaller claims and not have to go to the insurance company. And that allows them to buy more in liability coverage, which I always circle back to. Like I always look at, if you go from like a $5,000 deductible to a $25,000 deductible, you might save $1,500 per year. And if your exposure is an additional $20,000, right? Yeah. Whereas if you only have 100,000 of liability and you buy $1 million of coverage, that might cost $500 per year, but you're buying 900,000 of liability coverage. That's money well spent. Yeah. It's just, everybody's got the same bucket of money to work with, and it's just how they work with it.
So this is a question for both of you guys, and we'll take turns. What's the one question someone who pays insurance premiums every month should be asking about their coverage and they never do?
One thing that they should be asking about their
and they coverage, just don't ask about something that,
I don't think people are, they don't think about things that they don't think that can really happen to them, but we know that do. Mm-hmm. And I do think that not necessarily in what we do, but in terms of like disability and long-term care, things that, may not happen for 20, 30, 40 years, it's going to happen. And mm-hmm. those are things that I feel like people, should be more concerned about. And that's where we can also help on the property and casualty side, because if we can, it's one of the most expensive things in everybody's budget is paying for their auto and their home and their business insurance. Well, if we can free up some more money, what they're spending on the property and casualty side, that allows them to maybe have some more money to consider, things like you do.
Yeah, to protect their income. Because I think, because it's just so overlooked. I still find it just fascinating that people just automatically get auto insurance, homeowner insurance, because it's required. I mean, and that makes sense. But so many people, they don't even think about protecting their income. And without the income, they can't even pay their premiums for the auto insurance, the homeowners. And so the whole house of cards goes down. So I just find it fascinating. So
that's a great way to put it.
Yeah. So Sam, do you want to take a stab at that one or maybe not?
Yeah, no, I'll take a stab at it. There's not misconception, but there's a conception out there that insurance is expensive, and it is. And I think so many people just accept that. They kind of take the slap in the face every month of this is what I have to pay. This is what I have to pay. It's expensive. But there's options out there. There is the ability to shop their insurance and find better rates. And I think so many people view insurance as things that they can control. So if they pay less for insurance, they'll be a safe driver. They won't do risky things in the house. They won't do certain things with their business. Their income's not at risk. But in essence, so much of where your insurance is going to come into play is things out of your control, whether it's Mother Nature, a hailstorm. We live here in Colorado. We get hail all the time. A driver who doesn't have insurance. I mean, you see people with temporary license plates that expired in 2024. You think they have insurance? I see that
all the time. Yeah.
Or, there's so many things that are out of your control that's where insurance is really going to help you out, is that there's those things that are out of your control. So if insurance is a big part of your budget, just like if you're paying for Wi-Fi or your cell phone or going out to dinner, you try and think of, hey, maybe there's a better place for me to pay for a streaming service or pay for my Wi-Fi or take my wife out to dinner. It's the same thing with your insurance. There's options out there. You don't have to just accept the large expense every single month. There's options out there, and that's what we're here to help them do.
That's great. That's really great advice. Maybe people need to take another look at it. So maybe if they've had a life change, maybe they need to go back and take a look, and maybe there might be some ways to change some things on their policies that might fit their budget.
Yeah. And
okay,
maybe,
so John.
I was
No,
just going to say we can edit this out, but maybe if we kind of ask a question and John, you or me can answer kind of about SOLA with the wind and hail, how much that's helped. I mean, I did it for my parents' house and saved them $1,000 a year and they've got the same coverage.
So what is SOLA? That's insurance that pays for the deductible?
Yeah. So it's
go ahead, Sam.
It's essentially just a policy for wind and hail. And I think John told me that here in Colorado with so much hail storms that we have, I think John said about 60 cents out of every dollar of your insurance is going to protect hail payouts for the carrier. And so it's a separate policy where you can pay for coverage for just wind and hail. So what we did with my parents' house was they were at like a $5,000 wind hail deductible. We upped that to like a $20,000 wind hail deductible. So by doing that, their premium came way down, but there's still that delta of $15,000. So we went and purchased a $15,000 wind hail policy. So if there is a claim, they have the same coverage they currently do, but by bringing their premium way down and purchasing this other policy, that delta resulted in about $1,000 a year savings.
Oh, that's big. Yeah, that's really great.
Yeah.
And that also protects against their, with their mortgage, part of your mortgage is your payment is based on what has to go into the escrow. So if you're mitigating the homeowner's premium, you're kind of protecting against your mortgage payment going up every month due to ever inflating insurance premiums.
That's interesting. Okay, couple more questions. These are based on some Reddit threads, so we kind of try to dispel myths. So there's a government worker with a full health insurance employer disability coverage, and he posted on subreddit insurance that he can't see the rationale for buying uninsured motorist, income loss, or medical coverage on his auto policy when his job already covers all of it. So from your desk, from your viewpoint, what is he missing?
Well, the uninsured motorist coverage, it pays for the negligence actions of an at-fault party who's uninsured or underinsured. And the elements that could go into the uninsured motorist claim would be potential exposure to medical bills, lost wages, as we've talked about. What happens if you're so disabled that you can never work again? What happens if there has to be modifications to your home because now you're in a wheelchair? Pain and suffering goes into that. So I can't say what all goes into a government disability plan, but there's a lot of things that go into the uninsured motorist for consideration of payment that may not be built into that government plan.
Yeah. Okay. There's another person who posted in Reddit, subreddit insurance. He can't think of a single scenario where anybody should buy extra loss or PIP coverage on an auto insurance policy. So from your experience inside the auto injury claims process, what scenario would prove this guy wrong?
Well, there are on health insurance, oftentimes there's limitations on certain modalities, certain treatment that you oftentimes see in an auto accident, like chiropractic treatment or massage therapy. Your health insurance may only pay for 10 visits a year, where I've seen people go to a massage therapist and a chiropractor due to an auto accident 50, 60, 70 times.
Oh my God.
Where, where that might be covered under the PIP or the MedPay, where that may not be covered necessarily on the health insurance.
Yeah.
And also from a, you got to think about when you're driving, you may have friends in your car, or your kids' friends in the car.
Yeah.
And they're not, or
your newborn baby in the car. Yeah.
Yeah. But your friends aren't going to be covered by your health insurance. And do you really want to ask every single person that gets into your car how well they're covered? So the PIP and the MedPay would cover them as well, where, may or may not have coverage on their own.
Okay, Sam, then John. One sentence each for a billboard every driver in Colorado would pass on their way to work about the coverage they think they don't need on their auto or homeowners. What would your billboard say?
Great question. Because I've seen some funny billboards by like Frank Azar.
Yeah, exactly.
Gotta be something that catches your attention. But I would probably go with insurance isn't your enemy, it's your protector.
I would say something like count on yourself, buy insurance.
Yeah. So you don't have to rely on the government or your employer. The same goes true for income protection. I mean, you don't want to have to rely on anyone else. You want to, that's what insurance is for, is to take personal responsibility. So when you're having the worst day you've ever had, you know that you're going to be okay. Okay, Sam, then John. What's the single dumbest assumption you've heard a person make about what their policy will actually do when something goes wrong?
Good, Sam, you first?
If
Go
you
ahead,
have
John.
one, go for it.
Okay,
Yeah.
I got a great one. I have full coverage. I'm covered.
Okay.
So they think because they have comprehensive and collision coverage on their car that they're fully covered, where they're not considering the uninsured motorist of the bodily injury or the property damage or how much rental car coverage that they have, or, there's so many different things. Fully covered is very much a misnomer.
I know. I think my favorite one, talking to people about life insurance, I literally had some people say that. I was with a couple. We were talking about life insurance. And he's like, I don't need life insurance. Look at her. She's hot. She'll find another guy. Like, wow. Okay. And if she doesn't, I mean, wow. So that was my single dumbest assumption.
That's fair. I've got a good one. I told my agent what I needed, so he took care of everything for me. I'll be fine.
Yeah, that's actually a really good one. Yeah.
We had a gentleman this last week. They've got a 2025 Porsche Cayenne S or something, and sent his policy over to us. We said, whoa, you don't have any collision coverage on your brand new, beautiful car. And he said, I don't. I told them that I needed that. It's on my other cars. Why wouldn't it be on that one? I don't know. Why don't you go ask the knucklehead agent who wrote this policy for you? We can fix that for you. And yeah, he immediately was like, they don't deserve to have my money if they made that big of a mistake. Yeah. And just by us, being thorough and doing the right thing and taking a couple extra seconds to be detail oriented and take a look and kind of go through it with a fine comb, there's a huge hole in coverage that you get into a collision. Your 2025 Porsche doesn't have any coverage.
Wow. I think the common thread that we're kind of going through today is people make assumptions, and oftentimes they're just wrong. They just assume that they're taken care of. They assume that their agent took care of them. They assume their employer is going to take care of them. They assume their wife's going to get remarried. They just make assumptions that may or may not be true. So, all right.
My grandpa always says, when you assume, makes an ass out of you and me.
Oh, I really like that.
Yep.
I know which grandpa said that. Yeah.
Yeah, you sure do.
That's really, I'm going to remember that one. Okay.
Yeah.
So before we wrap, what's one thing about protecting your home, your car, or your income that you didn't get asked today and you wish more people understood? Either one of you or both.
I think that, when I was young, and this I'll get to the point, but I used to go to Las Vegas and gamble. And as I get older, I'm like, I don't like the possibility of losing my money. I don't like the uncertainty of I like certainty in my life, and I don't like surprises. And I think a lot of people, as they start off in life and are more willing to take chances and until something really bad happens to them. And I wish that people, could just step back when they're thinking about things that are really important to them that are covered by insurance, and think from a long-term perspective rather than at the moment perspective. I think that's would be my answer.
That's a really good answer. Yeah, I think as time goes on, I at least know for me, I've been doing this 3 decades, and I'm at a point in my practice now where I probably get a call a week with a new person having some kind of disability claim, or we've had death claims. And so you really start to feel that this stuff actually does happen. You feel a little bit more vulnerable, and you don't feel as invincible. You really start to see it in action, and it impacts you.
Mm-hmm.
All right, Sam, anything else you want to add?
Real quick, I would go with the biggest thing that I think all three of us have kind of hit on is that people don't think bad things are going to happen to them. Like you said, Jamie, it was great. You go to an emergency room, you could ask every single person there, hey, did you plan on coming into the emergency room or getting in a car accident? They're all going to say no. Yeah. And by having the proper insurance, it's going to help those situations where you are in the emergency room, you're in pain, your business is losing income, you're going to be covered. And the other thing, I think of is you watch TV, you watch the Super Bowl. So many people are on their phones, laptops. You watch the Super Bowl, there's 18 different commercials from insurance trying to get your money, trying to save you money. How do you think that those companies can pay so much to constantly be advertising? That there's going to be this open free market, and it's people like us who can make sure that you're making the right decision, because it can be overwhelming when you see all these different jingles and different insurance companies everywhere you look. And we can help you out with that to navigate that confusing thing where insurance seems overwhelming and daunting, and most people don't know anything about it other than what they see on their screens. And we're there to help educate them and make the right decision for them.
Yeah, I think that's great. I think that's a perfect way to end all of this. So in closing, John, Sam, thank you both so much. What I keep kind of coming back to in this conversation about how much what we carry wasn't always our choice, and how one thing that always holds up is the income underneath it that's there, and it protects all of it. And I think we also have a lot in common where, this is a relationship business. Our clients come to us, and then we also, like you mentioned, Sam, we shop it around and guide them and make sure it's thorough. This isn't just transactional. Insurance is still a trust business, and you need to be able to have somebody who's really looking out for your best interest, in a company that does as well. So
absolutely.
So listeners, that was John DePinto and Sam Cleland, two voices from Colorado insurance business at opposite ends of the experience curve. So thank you guys so much. Really appreciate all of your insight, and thanks for being here.
Thank you so much, Jamie.
From the Income Protection Journal, you've been listening to the Income Protection Journal podcast with Jamie Fleischner.